Welcome everyone. We've got a couple questions here today on software costs. Let's dive in and see what we've got. Well, a lot of these questions are going to have to do primarily with should we capitalize or should we expense certain software costs? And in this case, well, let's think about it. We've got a chart, and I'm going to share that chart with you, although I would definitely recommend being familiar with this yourself. Memorize it, practice it, but for now, going through these questions, I'll bring it up for you as an example. Now, before even reading this, it's important to break down when are we going to capitalize any activities involved in our software costs? Well, let's think about that based on what we say here. The coding and development and testing, essentially, this is after technological feasibility. So that term you should be familiar with. After technological feasibility, that's when a product becomes the product itself. It's not just a bunch of R&D expenses anymore. It's the actual physical product. Well, it doesn't have to be physical. It could be software, but you get the idea. Obviously, software costs are intangible. So software release, this is going to be expensed because this will go on in perpetuity, essentially. All right, so this is technological feasibility. Now, let's see which costs happen after technological feasibility and in these two periods. Let's see. So collection agency spent $50,000 in staff payroll costs, investigating the feasibility of developing its own software program for tracking customer contracts. Let's read this one first. Well, this $50,000, is this going to be capitalized or expensed? I'm going to say that this one is going to be expensed because investigating the feasibility means technological feasibility does not exist yet, meaning it's not going to be $50,000 included there. After committing to funding the project, software developers were paid $200,000 to write the code, and the company incurred $70,000 in G&A costs related to training and software maintenance. All right, so remembering here as well, ongoing costs are expensed. So G&A costs related to training and maintenance, that's essentially something that's going to be ongoing, and you can't necessarily peg all of that to the asset. You can't capitalize it and put it on your balance sheet. It's going to be expensed and put in the income statement. So crossing off the 70. Now, what about our 200 here? 200 to write the code. Well, this is the code. So they committed to funding the project, meaning it's after technological feasibility. It's now a capitalizable asset. 200 to write the code is like putting in that much money to the asset. That's the value of the asset. It's capitalized, and now this software at its base is worth $200,000. Similar to if you bought a house and you put $200,000 into the house in foundational improvements, that would add to the capitalizable value. So final answer here is simply that $200,000 is going to be capitalized. Moving on to our next wonderful question here. We've got, okay, what amount should the company report for the total R&D expense? So flip side here, we talked about what's capitalizable and what goes to the balance sheet. Now we're going to ask what is expensable. It's not a real word, but wanted to roll with it there. What is expensable and what goes on the income statement? All right, so on January 1st, year one, and you know what? I'll bring up this other graphic I have here for you to visualize as well. Again, definitely recommend memorizing that, but it is here for your learning purposes. On January 1, year one, a company with a calendar year end began developing a software program that it intends to market and sell to its customers. The software coding was completed on March 31st, year one, at a cost of $200,000, and the software testing was completed on June 30th, year one, at a cost of $100,000. The company achieved technological feasibility on July 31, year one, at which time the company began producing product masters at a cost of $125,000. All right, let's think about this here. What is going to be expensed? Well, the company achieved technological feasibility on July 31st, year one. We could say that this is right here, so July 31st. Now, everything before that is going to be expensed. So what is before that? Well, $200,000, and this was completed in June, so $100,000. So a total of $300,000. And then what about the product masters? Well, those are after technological feasibility. And what are product masters? In my best wording for the purposes of the test, what you need to know, these are going to be the copies, the hard copies that you make additional copies from. So there is a core copy of Microsoft Office somewhere back in the day when they were all on CDs and you had to buy the CD. think of it like that. For the purpose of the test, that's pretty much the extent you need to know. Final answer here, that's capitalizable because that's after technological feasibility. And the $300,000 is our final answer. Those were some good run-throughs of software cost questions, definitely heavily tied into R&D as well. These sections go hand in hand. Hope you all enjoyed. Keep going strong. Go have an energy drink or coffee or whatever will keep you going. I believe in you. You should believe in yourself, and I'll see you next time.